Hi, I'm Vanessa from Premier Tax Solutions, and in this video I'm going to give you some tips on how to protect your business during tough times. As we go into 2023, the words recession and cost of living crisis are everywhere, and it can feel a bit doom and gloom. So here's some tips to help you think about how to protect your business and remain as profitable as possible. Tip 1. Are there any new opportunities to take advantage of? Often during hard times, new opportunities come forward. Is there a way that you could tweak your business model, for example? We have a client in the hair and beauty industry that's decided to offer memberships for nails. It means that they've got guaranteed income for a contracted period of time, and their client doesn't have to worry about finding extra money for doing nails. Is there a way that this could apply to your business? Tip 2. Remind your customers why they use you in the first place. When tough times hit, the first thing people do is look to cut costs. You need to remind your customers of the problem that you solve or the pain that you take away from them. And it's nice for people to feel loved. Tip 3. Budgets, cash flow forecasts and management accounts have never been so important. Cash flow is the number one reason why so many businesses fail. By keeping up to date with your bookkeeping, at least on a weekly basis, means that you've got up-to-date information at your fingertips, which in turn means you can analyse the performance of your business. A good business should always set budgets to work to. You'd not drive to London and not use a sat-nav because you wouldn't know where you're going. So the same applies in business. You should always set goals and set your budgets. Cash flow forecasts can give you an early warning if it's likely that your business is going to run out of cash. This means that you can arrange to borrow money in advance or maybe deal with some issues that might have cropped up. For example, if staffing costs are too high and that's impacting on your cash flow, you could look to reduce staff numbers. Management accounts provide an up-to-date review of the business. We practice what we preach, and we do bookkeeping and review reports in Xero on a daily basis. We also do monthly management accounts, cash flow forecasts and review budgets on a monthly basis. We always aim to get our monthly reporting done by the 7th of the month, so it's not too far out of tune. We know how vital these reports are to have a successful business. Tip 4. Keep on top of your debtors. Just in case you've not heard of the word debtors before, debtors are people that owe you money, so your customers for example. We are noticing that more and more of our clients are finding it increasingly difficult to get paid the last few months. And this has a knock-on effect, because if they can't get paid on time, they can't pay their suppliers on time, and so then you're in a vicious circle. You need to prioritise chasing the pennies. If you haven't already got payment systems in place, you could look at things like Go Cardless for direct debit or something like SumUp or Stripe for taking card payments. The easier you make it to get paid, the more likely you are to get paid quicker. Tip 5. Plug the leaks. In business, we can often be losing money in areas that we don't realise. Get clear on what service it is that you're providing, and don't let scope creep happen in your world. For us, this comes in the form of year-end accounts and bookkeeping. So quite often, somebody will sign up for year-end accounts with us and then expect us to do all the bookkeeping for free. If we go ahead and just do it, we'd be losing hundreds of pounds of unbilled work and also putting pressure on staff when they could be serving a paying client. Just think how much money we could be losing in wages there. If people want additional products and services, then you need to make sure that you're charging for them. Hopefully you found these 5 tips useful. Thanks for watching.